Let's talk about Texas A6 loans versus agency cash outs. And I realize this is a very technical topic, but if you're out there and you're Googling stuff and trying to figure out what's the difference, because maybe somebody mentioned it or you got in trouble already with some other lender, let's talk about what the differences is and how they impact you. So these are refinance loans. So a Texas A6 loan and an agency cash out, they're both quote unquote equity loans. But the reality is they don't necessarily do the same thing and they don't give you the same cash. So they are very, very different. And also to be very clear, and this for this video, this Texas A6 loans, I'm talking about a first lien normal loan, 30-year fixed rate or whatever it is, but not a HELOC, not a home equity line of credit. Technically, a HELOC, a home equity line of credit, is in fact a Texas A6 loan. However, more often than not, people refer to it as a HELOC. Well, they know it's an A6, it's not the same. So again, I understand. Let's get into this, but it is very important that you understand the difference if you're looking to get cash out on your home in Texas, or at least do something where you're trying to refinance and somebody mentions the word cash out, even though you're not trying to get money. So bear with me. I promise we're gonna land the plane. All right. So Texas A6 loans versus agency cash outs. Let's first talk about the Texas A6 home equity loans. Let's give you a quick overview. Let's explain what that even means to say the word A6, or technically it's not a word, but an A6. A Texas A6 loan is a home equity loan. And in Texas, unbeknownst to me, when I started in in the mortgage industry in the early 2000s, there is a Texas Constitution. And in that, under Section 50A6 loans, it talks about what the Texas laws are against borrowing against the equity that you have in your home. So the biggest one is that in Texas, only in Texas, uh, a homeowner cannot get more than 80%. So meaning they have to keep 20% equity in their home. They can't get more of a loan to value higher than 80% of the appraised value. So that way there's always 20% equity in the home when you're doing an A6 loan. And the rules are written to protect homeowners essentially against themselves. There's a whole bunch of other things with minimum waiting periods and a bunch of legal requirements that we won't get into here. We cover that in other videos and other blogs. But the reality is, this is meant for taking cash out. A Texas A6 is you're typically, not always, but typically getting money out of your home to do something with it. These are typically the bigger loan amounts when you compare them to the other home equity loans like the HELOC, right? These are typically better rates than what you're looking for when you go to other sources of borrowing. You can use the money for essentially anything you want with an A6. You can use it for debt consolidation, paying, school tuition. You can use it for home improvements. You can go to Vegas. So the money's yours to do what you want. Oftentimes, most often, these are fixed interest rate loans. Again, side note, the HELOCs and things like that aren't. But for what we're talking about here, it's true, and that these are absolutely phenomenal products to get tap into equity in your home. So it does need to be a Texas A6 is for a primary home in Texas. So if it's a second vacation home, a second home or vacation home or an investment property, A6 rules don't apply to you. It's different. Those are quote normal cash out loans. But these are for single family, like, owner occupied homes, 1 to 4 units, typically single family duplexes are typically only allowed. Loan to value ratio, as I mentioned, 80% or below. And you got to have all the normal stuff to qualify. So that is a Texas A6, right? An agency cash out. Let's talk about the difference. So an agency cash out is refinancing. But what's happening with an agency cash out is somebody may not actually be going to get money out of their home. So an agency, when the word agency is used, we're talking about Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac, they will have the rules for what an agency cash out is. So somebody may be doing something, not accessing their money out of their home, but it is considered a quote agency cash out. So the biggest example of this is when somebody's paying off a pool. So a pool loan or a home improvement loan or some type of second mortgage. This is the most common where somebody has a normal mortgage that they bought, and then let's just say a year later they decided to put it in a pool and went and got a second mortgage. So they didn't get cash out. They did a home improvement loan, right? So there's no A6 on the property. And then when they want to refinance to put them both together into one big loan, that is an agency cash out. So why does that matter? Well, it sucks. And I'll just say it does suck, right? They are now going to pay cash out interest rates because cash out loans are considered more risky than normal loans, right? Air quotes, normal loans. So when somebody takes that pool loan and combines it into one single loan, because typically pool loans, second loans, second mortgages are going to have higher interest rates. So when you put them together, you're like, oh, cool, I'm going to get this low, great rate. Well, you are, but you're going to have a little add-on to that rate because, again, Fannie and Freddie consider that an agency cash out. So even though you're not going to get a dime from that refi, it is a cash out loan. And so that's the biggest difference. Now, if you said, hey, I want to combine them and I want to get an extra 50 grand because I got other stuff I want money for, cool, it becomes an A6 loan, but not an agency cash out anymore. Now it's just a cash out A6. So again, the benefit of these things is that you do get access to cash or you're rolling and consolidating things in to make sure they make sense. But the reality is it's not apples to apples, right? Because you can not get cash out and yet you can still get hit with the cash out, higher rates and things of that nature. So again, this goes under the life isn't fair. So for Texas A6 loans versus agency cash outs, the biggest difference is that it's when you pay these things off, it's going to ultimately be that you are going to have a higher rate for both A6 and cash out, even though that the A6, you actually get money in your pocket or you pay off some debt versus the agency cash out. You're literally just taking care of some mortgage that, like this pool loan example, or you're doing things that basically just, maybe it's paying some other stuff. A home improvement loan is the most common, right? Whether it's a pool loan or something like that, that's the most common for the agency cash out. So again, if you have questions and you're like, man, I don't get it, this sucks, and this is a boring topic, I get it. Feel free to reach out to us on the Mortgage Mark team. Mortgagemark.com is the best way to find us. We'll be able to walk you through this, help you compare the difference of whether your loan's an A6 loan or a cash out, an agency cash out. Again, they're both more expensive in terms of rate because it is what it is, but happy to help you walk through that situation. So mortgagemark.com. And remember, when you think mortgage, think Mark.